Shalom and welcome to this afternoon's presentation, Beyond the Basics, Building Your Small Business. This is Josh Sussman. I'm with the marketing and program team at Nefesh B'Nefesh. We are very happy to have with us Baruch Swinken of Route 38 Professional Services and Fred Kahn from Philip Stein and Associates, who will be giving this evening's presentation. As I wrote to you this afternoon, this is being recorded and we will send out all the relevant information, the contact information, the PowerPoint presentation, and the recording either tomorrow or the next day. Please use the Q&A section for your questions as opposed to the chat. It makes it much easier for us to manage. And with that, I turn it over to Fred. Thank you very much.
Thank you, Josh. And, thank you, Nefesh B'Nefesh, for this opportunity. Just a little background, my name is Fred Kahn. On behalf of Philip Stein and Associates, we're a U.S. CPA firm based in Israel. I'm actually celebrating my 15th year of Aliyah with Nefesh B'Nefesh this week. So for me personally, it's very special to be presenting here on behalf of Philip Stein and Associates for all you that are looking to build your small business, celebrating 15 years here and doing it with Nefesh B'Nefesh. A little bit of background, we're a U.S. CPA firm based in Israel, and we help many Olim navigate the various taxation elements of U.S. taxation, and we work with Israeli counterparts as well on the Israeli end. And the presentation here will really be, as it's entitled, The Basics of Building Your Small Business in Israel, taking into account the tax elements both from a U.S. perspective and an Israeli perspective, really all the basics. As Josh mentioned, please feel free to use the Q&A chat. I will stop midway through to address some of the key questions that come up. And as well, my colleague Jacob Jacob is here with me, and he'll be answering some of those questions that you have in real time as well. So feel free to ask the questions on the Q&A. We will answer them as soon as we can. And also at the end, there'll be more time for Q&A. And with that, I really want to connect to everyone here to walk you through what are the key issues that you need to worry about when you start a business in Israel. It is different than in the United States, so I do want to highlight those differences, but the basic and most fundamental point about how you start your business is really the same. And that question is, where do you start when opening a business in terms of tax? How do you want to be taxed? There are two fundamental ways that you can be taxed when you start your business. One is as an individual, and the separate as something as a corporation. So I like to really, when I review this topic with people, go through the basic difference between an individual and a corporation in taxation, because once you understand that, I think it'll help you in your decision-making process, understanding the various variables at play here. So in terms of an individual, one of the ways that you can start your new business is essentially you'll be taxed as an individual, which means that as you're used to, you'll pay personal taxes, individual taxes, and you'll pay Bituach Leumi in Israel, which is so like Social Security in the United States. There are different things you can do to do that, but essentially they're different. There's something called an Osek Moshe and Osek Patur that you can use in order to facilitate that. But essentially, when you start your new business, you're saying, I'd like to be taxed as an individual. The second way of doing so is, again, a business, is you start a corporation. Now, when you start a corporation, what really differentiates the corporation from the individual is that the corporation itself pays something called corporate tax on its profits, which in Israel is 23%. And then in order for the shareholder or the business owner, in this case, to take the money home and to be able to use it, they take a dividend from their company. They pay in Israel be a 30% dividend on their company, and then the money is theirs to now enjoy and to use. Another method that can be used with corporations is you can essentially pay yourself a salary from the earnings, in which case you wouldn't have corporate profit and you would revert back to being taxed as an individual. But you have to realize that when you start a corporation, there are two levels of tax that you need to worry about. Now, many people also like the corporation because they can pay only the corporate tax, and then they can leave the rest of the funds, the money, in the company And that gives them more working capital to fund their business, meaning they pay 23% tax. The remaining 77% of the earnings stays in the company, and that's a lot more working capital that you can use to invest in and to fund your business. And that's one of the benefits that a corporation has. But the way I like to really always start out when I work with people and thinking about how they want to start a business is, how do you want to be taxed? Do you want to continue to be taxed as an individual, income tax, bituach leumi, or do you want to move over to a corporate model of corporate tax? And that's the basic, I always say, the starting point. Whenever you open up a new business, you say, which way am I going? What's the crossroads? So the crossroads is, am I going as an individual or as a corporation for tax purposes? Now, the next slide, I really say, this is where people, olim that are opening up a new business say, I would say, we're not in Kansas anymore, basically. The list of things that you need to do when you open up a business in Israel is significant, and I really wanted to go through them, quickly with everyone here so they understand the basics. And this goes whichever way you open that business. The first area is you open up a file, a tik, with Mas Haknasa, which is the income tax authority. The second area is you need to open up a file with VAT. In Israel, that's called Ma'am. And the third area is you open up a file with bituach leumi, Social Security. So it's important to realize that whatever business you open, you need to open up files. You can't just start, run, and do that business, but you need to open up files with these different taxing authorities just to get the ball rolling. And I'll go through the different structures that we can use and what really needs VAT, what needs more bituach leumi or mas haknasa. But the important thing to realize is that when you open up a business, the business needs to have these various files open with the taxing authorities so that you can pay in appropriately and you can function properly as a business. The last area is not something that you definitively have to do, but it's something that I like to warn people that you're gonna have to do, is that when you open a business in Israel, they like to make you do something called a hatzarat home, which is a declaration of assets. Now, there's no tax due on that hatzarat home, but people do get a little scared from the fact that they have to, walk in and tell Mas Haknasa what the worldwide assets are if they have any. So people that might have thought, hey, I'm under the radar here, I don't want to start, showing everything. I'm a simple salaried employee. Once they open up even a small business, they have to realize that Mas Haknasa the taxing authorities will ask you to do this declaration and be ready for it. Again, it's not something to be so scared of, but my clients don't like surprises, so I like to tell people to be ready for it when you open up your business. The main thing is really to open up these 3 files and to make sure that they're properly taken care of on either a monthly, bi-monthly basis, whatever it might be. Now, in terms of the business types, and this is what I was hinting at, is there are really 3 essential business types that you can function with when you open up your new business in Israel. The first is called an osek patur. The second is an osek morsheh. The third is a chevra, a corporation. And the fourth is what we like to say, none of the above. I'll leave the best for last for Baruch to really go into what none of the above might be towards the end of the presentation. But let me go through the first 3 first, and then we'll get to what might be the most exciting option of all, none of the above. In terms of an osek patur, this is something that, it's an exempt organization. This has a distinct advantage to other businesses in that if you can keep these criteria, you do not need to collect VAT on your income. VAT or ma'am is a 70%, tack on, additional taxing that a business is required to collect and remit to the taxing authorities, meaning it's the obligation of the business to make sure they collect it and remit it to the VAT authorities. If you don't, you're held personally liable for it, so it's important to do. But if you're an osek patur, Israel says you don't need to collect this, which gives you really a distinctive competitive advantage against a competitor that is collecting VAT in terms of, on the bottom line, your product might be 17% cheaper than his because you are not adding on VAT to your service. So it's important to know that if you fit this criterion of osek patur, you do have that advantage. Now, there are many criteria in terms of, for example, an accounting office or a law office cannot be an osik patur, no matter how little income they're earning. And I can send a list. Really, there's a whole list of different industries that are not allowed to be, for whatever reason, an osik patur. They're not. But if you're one of those industries that can, there is a distinct advantage to it. There's also really a revenue threshold to it, in that you can't have revenue of more than 100,000 shekel for a year, not profit. Revenue. You can't have a revenue of more than 100,000 shekel per year in order to be an osik patur. But again, an osik patur, if you do qualify, people like working with it because it's 17% cheaper in terms of there's no VAT, and there are other advantages to it as well, in terms of there's just a lot less hassle. Meaning, we'll go up the ladder of osik patur, osik morsher chevra, in terms of how much you need to deal with the taxing authorities, but osik patur, you really don't have to deal with them a lot. So people that don't like to deal with authorities very often and file very often do enjoy having osik patur if they're able to. But I would say that at another level, I wish you all that you don't have to be an osik patur, that your businesses continue to grow to a point where you really are making more of a choice between the other methods here of osik morsher chevra, because osik patur is really for a very small business. Now, osik patur, I'll get to soon, is taxed as an individual, and I'll go through what that means as well. As your business grows, and let's say you outgrow being an osik patur, the next level up the chain is something called an osik morsher. Now, an osik morsher is a company, so to speak, but it's not a chevra, it's not a corporation. It's an entity, but it's not a corporation, and there's not as many accounting fees that relate to that filing in Israel. I'll get to the U.S. as well, but in terms of Israel, osik morsher does not have to file as often as a chevra typically. You can have unlimited income. VAT filings, depending on how much revenue you have, would be once every 1 or 2 months, but it is less hassle in terms of the actual filings than a chevra, and some people do enjoy it. In terms of the taxation, you are an individual. This is really what I started out as. If you're an osik patur, you're an osik morsher, the tax is as an individual. So you'll be taxed according to your marginal tax rate in Israel. Again, if your business is acting in Israel, you will pay Israeli tax and get a credit in the United States for those taxes paid. But the taxation in Israel will be individual. You'll pay bituach leumi, obviously. And the treaty, U.S.-Israel tax treaty, will help you with income tax, meaning whatever tax you pay here, you get a credit in the United States. And I have tables for you as later slides, so you can actually see what the tax rates are in Israel and the United States. But when it comes to Social Security tax, there we do not have a totalization agreement, meaning what? That even though you've paid bituach leumi here, you still on your income will have to pay Social Security in the United States. And for many people, that's a distinct disadvantage to the osik patur, osik morsher track, because they feel that, you know, I paid income tax, I paid Social Security, and I tack on another 15% Social Security. You know, with not a lot of earnings, you're paying 50% to the various U.S. and Israeli authorities, and people, that can really hurt your cash flow. So that can be, for some people, real negative to this type of a structure. Some people actually enjoy paying U.S. Social Security tax and don't view it as a negative consequence, because if you've paid 40 quarters or 10 years of Social Security, then you're entitled to U.S. Social Security upon retirement, to date at least. Hopefully that won't change. And especially for people that worked in the United States before their aliyah and they want to put in more money there, some people look at it as a nice savings plan. But in terms of the day-to-day running of the business, it does make a dent into the profits, because you're paying, as I said, Israeli income tax, bituach leumi here, and U.S. Social Security with any of these entities. I have a slide here just so everyone can see what the U.S. federal income tax rates are for, you know, single head of household, married, filing jointly or separately. This will be sent out to you for your reference. And I also gave you, for, you know, as of 2020 for the Israeli rates, just so everyone can see the rates here as well. But obviously we're tacking on to these rates bituach leumi and Social Security tax. Before I continue, Baruch, are there any questions that people would like to pose now that we're in the chat? I'm happy to address a few before I get to Chevron.
Sure. There haven't been too many questions. Just to clarify again, this webinar is focused specifically on Israeli and U.S. tax issues. There haven't been a couple questions regarding Canadian taxes. We are not addressing Canadian taxes during this webinar specifically. I apologize for that. Josh can offline send you to somebody, refer you to somebody who can help you with specific Canadian tax questions. There was one specific question about Hatzarat Hon. I thought maybe it'd be a good idea to clarify. Yaakov did answer it, but I do know some people are worried about Hatzarat Hon and the timing of it and when it occurs, because as we know, it's not necessarily a one-time shot. It can happen over the course of time. You get one and then a second or third. Can you just give a little more detail about what the Hatzarat Hon process is and what some of the things you can expect are and the risks that you are running?
Okay, sure. So Hatzarat Hon is a declaration of assets. The U.S. has a similar thing, but they only ask for your non-U.S. assets on, let's say, an FBAR. But a Hatzarat Hon is basically, you need to list all of your worldwide assets, and you need to provide some sort of proof as to how you arrived at that asset, meaning the value of that asset. And you submit that usually within the first few months of when you open up your company. You should expect them to ask you for that. And usually within 3 to 5 years from that date, you should expect another request for a declaration of assets. And the Mas Haknasa is really, they're looking for some weirdity. They're looking for some weird occurrence that basically would say, you declared assets of, $200,000 when you started your business. We see that your business has made $100,000 a year. And your second Hatzarat Hon has $5 million on it, so something's weird here. Where did the money come from? That's what they love to ask. That's what they're asking. They're really monitoring the shift in your assets, essentially, and they're saying, does that make sense with your income? Now, it could be that you got a gift from a parent, and that's why you have a lot more assets. There are answers to it, and you would already preempt them when you gave your second Hatzarat Hon to explain why your assets grew in a way that didn't relate at all to necessarily the income that you earned. But it's their way of checking that, they haven't missed anything essentially in terms of the growth of your business versus the growth of your wealth. So as much as they're saying, look, we just want information, the US also just wants information, but there is a reason. And you should be consulting with a CPA if you feel that, there's an obvious question here, meaning your assets, tripled in value despite the fact that your chevra wasn't making any money at all or something like that. A weird question like that, you should try to cover, because that's the most common question that Mas Haknasa will ask is, hey, I see your assets changed drastically, but when I look at your income, I don't really see that. Do you maybe have income abroad you're not telling me about? What's going on here? So that's the point of the Hatzarat Hon, as innocent as they always try to sound when they're asking. That's the point of it, and that's the biggest thing to be careful of. If you're straightforward, then they shouldn't have any issue with it. But you should expect it, and it's important. One spouse I've had, let's say, wants to open up a business. The other one's terrified of Hatzarat Hon. They should talk about that before they open up the business, because if one of them does it and then the other one has to do Hatzarat Hon when it wasn't maybe telling all, that could lead to some issues. We've seen that, so it's important to understand that it's going to come. I always like to preempt and tell my clients beforehand that it's coming so they can be ready for it and be properly prepared. I guess with that really the first part of this. Any other key questions, or should I move on to companies now?
One other question I think we can answer. Again, Yaakov's been doing a great job of answering all these questions, but just I think it's relevant for the entire group. As a person gets closer, there was a specific question about switching between an Osek B'Torah and Osek Moshe mid-year. And as Yaakov answered, that's something you actually have to do if you're getting to the 100,000 shekel revenue cap. Maybe Fred, would be worthwhile to take 2 minutes to talk about when a person's getting close to that cap and they're not yet at the end of the year, if they're, what specific things do you have to think about as you're transitioning and how to make that transition?
Right. So I would say the most important thing to do is obviously tell your CPA that it's coming. Thank God you're having a good year and it's coming. And VAT, get ready for VAT. The most important thing to be cognizant of is that once you break that threshold, VAT becomes very, very, very relevant, and be on top of it. Because it's similar, for US OLIM, I can talk about sales tax, for example, is the closest thing that we have in terms of, it's one of the few things that if the company doesn't collect it, they're liable to remit it. And the Ma'am authorities here can be unpleasant if you don't take care of that and you don't know the rules. So it's very important that as you're getting to that threshold, you make sure that on your invoices, you'll get a thing of invoices that you're collecting the VAT immediately. You're not messing around, because if you miss that, then VAT could come back to your company and say, it's very nice that you were, a few months delayed in realizing you need to collect VAT, but we want our VAT on that. So it's very, very important to be, it's the exact same thing with sales tax. If anyone does business in the United States as a corporation, the authorities are not very flexible with the fact that you missed it and didn't collect it. The reason why they make you liable is to make sure that you're diligent in collecting it, because they don't want it to be their problem. They want to make sure that you're collecting it and you're giving it to them, and it's 17%. So it is very, very significant. So keep an eye on it. If you're excited and your business is doing great, and thank God you've shattered Osek Patur, you're at Osek Morshe, make sure right away you can tell your CPA, get me, receipts that I can add on the 17%, and I can remit the VAT timely as well to the authorities. Whatever time period is set up, 1 month, once every month, 2 months, you need to make sure you're remitting it timely and collecting it immediately, because it's very, very tough to go back to customers and say, hey, I just found out I'm supposed to collect that. I gave you the service. Can you give it to me? It's not the easiest conversation in the world. They will always, I think one of our basic nefesh b'nefesh talks we discuss, for an OLED, the most important question you can ask is the price you're quoting me before VAT or after VAT? For OLIM, we haven't heard of VAT, and people will say, oh, I thought you collected VAT. I thought it was included in the price. And you say, no, I was an Osek Patur and I was well, I didn't know that, they'll say. So you really want to make sure you're very, very upfront. Tell them immediately, you need to pay me VAT. Otherwise, it's very, very tough to go back, and it can be very troublesome for thank God, a growing company if they miss that mark.
If I may just add quickly to that, I'm sorry, is that VAT is something that if you're dealing with another chevra, another corporation, it's a pass-through for them. It's not an expense. It's a balance sheet item. It's basically they're taking money from one place and putting it into another. So there's no real there's no real impact. It's just taking, as I said, from one bucket to another. But if you are dealing with individuals and you're dealing with, or an amuta, a non-for-profit organization that doesn't have a way to get that VAT back, you're actually adding 17% to their total cost. And that's something that you have to be aware of with your pricing, that you're going to be jacking up your prices by 17%, which could definitely cause some negative feedback for you, and you should be aware and prepared for that.
Yeah. People like to negotiate here, and people will be like, hey, why am the guy next door, he doesn't collect VAT. Why are you collecting a VAT? And you will see the smile on corporations' face when they pay you VAT versus the individual. The corporation's like, oh, sure, you want VAT? Here, no problem. The individuals aren't as smiley about it. So that's the reason why, if you were wondering. That's the reason why VAT is a big difference, and it's a big deal here, to VAT. So it's important to be cognizant of it, to know about it, and to take care of it. Because when you're growing your business, what you really want to make sure is that you're not missing anything. Each step of the way as it grows, you're checking off. I did this. Now I have to do VAT, and I'm doing it properly. You want to really be diligent with that. I would say VAT is a key issue. And there's some people that for certain services always like to use Osek Paturas because they don't want to pay it. So you have to, as you grow, you have to realize, look, I'm giving a great service and I charge VAT the way I should. And again, all of this generally in the taxation world for you, it's important, I can't emphasize enough, you are being taxed as an individual. This whole world of Osek Patur, Osek Morshe is individual taxation. And it's important from a US perspective to realize that, you're being on top of the Israeli filings, but if you're earning nicely, you need to also pay US Social Security 15% on those earnings. And although no one's running after you for that, people come to us at the end of the year, they think they had a great year, they've spent all their money, they went on a great vacation, and then we say, by the way, I see you had an Osek Morshe this year, you realize you owe 15% tax to US authorities on all of those profits. So it's important in terms of your budgeting to realize that there is a din v'cheshbon. There is a time where you need to make a judgment on your U.S. tax also and Social Security, and make sure that you pay that at the end of the year. Also, again, assuming you go the Osek Morshe, Osek Patur route. The second part of this really now is the Chevra route, the corporate route. now, corporation, I find, for people that make Aliyah, it's a big jump in terms of the difference between what you need to do to run a corporation in Israel versus the United States. People are, I think, surprised in terms of, when you open up a U.S. corporation, there really are not a lot of expenses involved in opening it, and the annual upkeep for a very, very simple corporation is not very, very significant. In Israel, that really is not the case. Running a corporation is significant. You need to have an annual audit done every year, which is not the case in the United States. The good news of a chevra is that since you're not self-employed, you don't need to pay any U.S. Social Security tax on the earning. So the treaty really does help there. However, what the treaty, I guess, helps, where the U.S. helps in terms of tax, it almost hurts you in terms of reporting. There's really not an area in U.S. taxation where we find that there's more of a reporting burden on U.S. taxpayers. There's a new Form 5471 that has been enhanced significantly, I would say, to put a positive light on it for U.S. people that own Israeli or any foreign non-U.S. corporations, called the Form 5471. And in the Trump tax reform, there was a tax called the guilty tax that he added onto that. Now, generally speaking, Israeli corporations are not obligated in U.S. guilty tax, because we pay 23% corporate tax here in Israel. But if you feel like, hey, I'm in what's called an Ezor Pituach, or a very low tax area in Israel, so I'm paying 7-8% corporate tax in Israel because there's incentives for me to develop, you do need to be very, very aware of this guilty tax, because the United States targets you and they want some tax on that income. So if you open up an Israeli corp, you need to be very careful, first of all, in terms of the reporting requirements. If you don't file the Form 5471 properly in the United States, it's a very, very, very steep penalty. And you really need to know, in Israel, there's a lot of reporting requirements. The annual audit, remitting to the different authorities, the need to save every single expense receipt that you have. There's a lot of work that needs to be done into managing, into running your corporation in Israel that you didn't necessarily do in the United States. Our U.S. clients that are in the U.S. that have a corporation, they can send us an Excel of their income and expenses, and we can rely upon that to prepare a tax return. And we trust that they have the receipts, but they're not original receipts that are remitted to the authorities. When it comes to Israel, if you're running a corporation, you need to know that every single deduction that you want to take, any expense you want to take, you need a receipt, you need to keep track of it, you need to remit it, and there's a lot of this work that needs to be done and annual filings that you're not necessarily used to that go into running your corporation in Israel. You get used to it, and it's great, it all works, but for someone that made Aliyah is doing it, it's important to know that it exists. Now, in terms of the taxation in Israel, I really hinted to this in the beginning. Israel's corporate tax rate is 23%, and the tax they have on a dividend, meaning taking the money after you paid corporate tax, taking earnings home, so you can actually use them, is an additional 30%. If you've done fabulously well, then you pay another surtax of 3% in Israel, and you would pay on the Obamacare in the United States if you've done fabulous well as well. Now, what you also so keep in mind, basically, for a corporation, even if you're not earning a lot of money, basically, if you look at the 23 and the 30% here, that you're basically paying 50% tax, even on a small amount of profit. So what some people like to do is they'll take a salary from their corporation to shift some of their earnings to individual tax rates. If they're in, let's say, a 15% bracket or something like that, they'll take a salary on those earnings, and because it's the salary, then there's no U.S. Social Security tax, because the treaty there, you'll pay Bituach Leumi and Mas Haknasa, and I can't emphasize enough that if it's your corporation, you need to make sure that you've remitted the withholding properly to the authorities, to the to Mas הכנסה and to Bituach Leumi on the salary that you're giving yourself, but it is a way to shift your tax bracket from a 50%, corporate and dividend on the corp to to your individual rate if you're at a low rate. So keep that in mind. It is a good planning tool. Now, in terms of U.S. taxation, as I said, you do have exposure to this GILTI tax if you're in one of these areas that doesn't tax you at a high level. But if you take a salary, again, you are able to go below the 50% if you're at a lower bracket for Israel and the United States. So that does help. And if you're earning, and if you're taking a significant dividend from your corporation, you also should be aware of something called the NIIT, the Obamacare tax of 3.8% that would apply if your earnings are quite significant and you take dividends in addition to the 23% corporate tax, 30% dividend tax. There is a 3.8% U.S. tax on dividends. Again, if your total earnings are above either $200,000 and $250,000 for the year. And it does exist. Plus, there is something in Israel called Mas Yesef surtax of 3% if you're earning significantly on that as well. One of the benefits, I do want to at least give some more benefits to a chevra. Now, again, a chevra, I also should emphasize, is a very, very popular tool to be used if you have really a growing business and you really need to manage it. Then the most popular tool might be chevra. But it does give you, the owner, some flexibility in terms of how you're taking your earnings. The first flexibility is in terms of salary versus, paying corporate tax and dividend. And it's also, you can take some of your salary as possibly a bonus where you're not paying in fully to a pension. Or you can make the other approach and say, hey, I want to make sure that I'm paying in fully to the mandatory pension for myself on the salary that I'm paying myself. And in terms of that way, you ensure that you're not losing out on some of the benefits that employees have, even though you have a corporation, because you're paying yourself as an employee of your corporation. So you will be able to benefit from funding your own mandatory pension. Israel also has something called a Keren Ishtalmut savings plan, which is up to a certain amount you're able to put away money without, pre-tax money. So your employer needs to have started a Keren Ishtalmut plan for you. So if you have your own company and your own employer, you're able to set up that plan for yourself. And if you can fund it, then that's a really nice benefit that you're able to give yourself as an employee of your chevra. That's really beneficial to have the flexibility to decide, do I want to fund my Keren Ishtalmut for myself? Do I want to pay into a pension? How do I want to really compensate myself in a way that long-term works for me? And when you have your own company, you do have the flexibility to make those decisions. Another benefit is you could possibly have a company car and be deducting some of the gasoline from that car if it's business related. So the chevra does have certain benefits in terms of you are your favorite employee of your own corporation, and you are able to take care of yourself in certain ways that you have the decision-making power to do. So the chevra does have the benefit of giving you that flexibility of doing that. So again, just to back up, what we discussed so far is the two first ways you can really start your company is Osik Morshe, Osik Patur. Those are all ways that you're going to be taxed as an individual. You still relate to the various, VAT, Bituach Leumi and Mas הכנסה. You have to relate to them. You have to pay tax as an individual, and the accounting fees are typically less under those structures. The chevra usually has much more significant in terms of the accounting fees, and the taxation there works in terms of you have corporate tax as the default, but you have the ability to take it as an individual. Now, when I started out, I also said that there is something called none of the above, which is a PEO company, which is something that Baruch will get into, and it's something that is certainly very intriguing. For some people, it really can be the perfect solution. And I'd like for Baruch to really go through what that means and to go through how that really would help you and when it would be the right choice for you. So I'll turn it over to Baruch for this presentation, for this.
Thank you, Fred. Just want to again thank Nefesh B'Nefesh for allowing us to present tonight, and thank Fred and his partners at Philip Stein and Associates, who really are the gold standard for US CPAs in the country. It's really an honor to be here with all of you tonight and to be presenting along with Fred and Yaakov. As Fred mentioned, I started a company a number of years ago called Route 38 Professional Services, which fits into this PEO. A PEO is a professional employment organization. That's how it's referred to in the States. In Israel, sometimes you may hear it referred to as a manpower company or a payroll company. The manpower company is definitely a term we would prefer not to use, because a manpower company, a koach adam, has a very, very different connotation legally. But that's the way it's referred to sometimes. Specifically, if you're opening up your own business, there are certain situations where a PEO could be perfect for you, and there's some situations where it's definitely not the way to go. First of all, it's very important that if you do decide to look into using such a company, whether it's mine or any other service, the area is a little bit gray. There is a lot of there are a lot of legalities and accounting issues that you have to make sure that whatever service that you're using, they are on top of. Basically, everything Fred has described up until now, the company that you're going to be using needs to be aware of. It needs to be you need to be ensured that they are doing everything for you properly, and that you don't get in trouble with anything that they're doing on your behalf, and therefore your due diligence is definitely required. Who does a PEO work for? Let's say you are coming to Israel. Most of you here, I believe, are already in Israel. There may be some people who are still in the planning stages. You are just starting your business now, and you've listened to Fred's terrific presentation over the last half hour or so. And there's a lot of information. And you're really focused on beginning your business and trying to get that off the ground, and don't want to really deal with the accounting and the tax piece of it. So one of the easiest ways to do that is to get it all off your shoulders and turn to this company, who basically will hire you as their own employee. And what does that mean? That means that the whole Osek Moshe, Osek Batur discussion that we had before doesn't need to become relevant to you, because you're not going to have to open up your own individual tax file. And by doing so, you're going to be avoiding the 15% Social Security tax in America, because you're going to become an employee of this professional employment organization. So that is a huge financial savings for you off the bat. Additionally, the service that they're providing for you is that you don't have to do any of this work. You should be familiar with all the terms. Incidentally, I should have mentioned that along with the materials that you'll be getting after the presentation with the next couple of days, will be a recording of this presentation, as well as the slideshow that Fred has presented. In addition to this, part of the slides that we have not presented tonight, there's a glossary of terms, which will define anything we've discussed tonight, really. I think it's very important for you to take a look at that, to familiarize yourself with the terms, and to ensure that you really understand everything Fred has presented tonight to the extent possible, because no matter what situation you structure yourself in, it's important that you take responsibility for your business and know what you're getting yourself into, and know what everything means before you're actually going to be signing anything and going in any particular direction. Again, if you are a freelancer, someone who's working with very little overhead, if you're a plumber, or if you are an electrician or something of that, that's the type of business you're opening, or you're going to have anything that's going to be selling things as inventory, and you're going to have a very high level of overhead of expenses, whether it's purchasing items, keeping inventory, stuff of that nature, then a PEO company is not for you. A PEO company is not able to manage your business and do the accounting for your business and complete, as well as many other issues that may arise. But if you're somebody who's working remotely, if you're doing digital marketing, social media, content writing, stuff of that nature, anything that doesn't have a tremendous amount of overhead, and you have a relatively low number of clients, maybe you're working on a project basis and you work on every couple of months on a different project, or you bill 3 or 4 different clients on a monthly basis, those are the type of people that are perfect for a PEO company, because the PEO company can come in. Basically, they'll require a contractual relationship with all of your clients, but they will manage everything from you from soup to nuts, basically. They'll take over that contract, They will invoice on your behalf, they'll collect on your behalf, and they will take care of all these tax issues that you have. You basically are left with nothing. If you are working as an employee in Israel, you do not need, and you have no other reportable income, you do not need to file an annual return. So you have no need to hire an accountant and to open up any of these tax files and to deal with any of these agencies. It's all being done for you. You do have to recognize that you are paying, when you become an employee of this company, you are paying both the employee and the employer side of taxes and social benefits. And therefore, it's critical to understand that you're not going to be getting as much as you probably would have if you were being offered the same job from a company. Let's say you're being offered a 10,000 shekel job for the company and you brought in 10,000 shekels of income. You're not going to be getting the same amount. It's important to understand that you are paying also the employer side, and there are fees obviously for the company as well that you have to take into consideration. If the amount of money that you are earning over the course of the month or the year is going to be enough that 15% Social Security tax will be more than the fees and the extra expenses you're going to be having paying the employer side of Bituach Leumi and pensions, then it's definitely worthwhile to look into a PEO company. If you're making less than that amount, generally speaking, if you're making less than 7,500 shekels a month, or if you are really an Osek Betur, it's really probably not a good idea to get involved with a PEO at this point. An Osek Betur, as we mentioned before, the most critical piece you're saving is VAT. A PEO is a chevra, generally speaking, and they do have to charge VAT. So you're definitely going to have to, if you engage with a PEO as an Osek Betur, you're going to have to increase your prices by 17% or eat that 17%. And therefore, it's definitely a good idea to stay as a Osek Betur, even though you have to pay extra taxes in the US, to avoid that 17%. In general, the rule of thumb is if you're making less than 7,500 shekels, 8,000 shekels a month, it's probably best to be managing your own business. And if you're making more of that, then it's a discussion to have, and you should probably do your due diligence to ensure that it's going to be a proper fit for you. One other thing I think is important to note is that while working as a freelancer, you still can have your own website and you can still have your own branding through a PEO company. You can still keep that information, but all of your invoicing will be done through that company. And if that's something that's important to you, that your clients don't get mixed messages, that they're sending their invoices to a separate company, if that's something you can't explain easily or you believe it's going to scare off some people, again, it's probably best to keep your own company, being able to manage it on your own, and being able to keep your own processes and responsibilities. That in general is the overview of the PEO company. Again, it's great for somebody who's coming here and starting and doesn't want to have to deal with all these issues and doesn't have to manage it and take care of it. But regardless, it's very, very important to understand what these issues are, to understand everything that Fred and I have explained tonight, so that you can responsibly make the best decision possible for you going forward. I think with that, let's just check the Q&A.
Also,
Go ahead.
Baruch, also in terms of the question you asked me, I'll put it back. I think if you use a PEO, the Hatzarat Hon is not as quick to come. Meaning, if you have that fear of Hatzarat Hon, by opening up your own company, PEO, you're an employee again, correct?
Correct. You're an employee. You will not get a Hatzarat Hon. And a Hatzarat Hon is only going to be given to someone who is an owner of a chevra or has their own, is an Osek Betur, an Osek Moshe. Someone who's an employee does not get a Hatzarat Hon. So if for whatever reason you do not want to file one, that is definitely also a way to get out of it. I do know personally, as the owner of my chevra, that I did get a Hatzarat Hon within literally weeks after I opened up my chevra, and it's a process. It takes a lot of time. It's a little bit expensive because you need an accountant to help you with it, and it's definitely a process to track down all your documentation for everything you have. I know somebody asked a specific question about having to report foreign assets in your first 10 years. I believe the guidance that I got at least was that I did not have to report in my first 10 years my foreign assets, but I've since gotten past my 10 years. Thank God I'm only 2 years behind Fred. And so my next Hatzarat Hon, which I was probably coming pretty soon, I will have to be declaring all of my global assets. And it's a lot of work that again, as you're managing your business, you probably want to be focusing on your business and not on extra accounting things. And this definitely something else to consider.
Right. So again, especially if you're in your 10-year holiday and you have allergies to being very buddy with the different authorities of Bituach Leumi, VAT, Mas הכנסה, and Hatzarat Hon, or one of the two spouses does, then a PEO might be a very, very nice Shalom Bayit solution for you guys to make everyone happy. Sometimes none of the above can sometimes be the best answer on a test. So that can work very well, and there's something to be aware of. What is most important for us, and a point of this presentation is so you can see upfield. You're starting a business. We want you to understand upfield. If you make this move, what'll happen, so you don't make the move, get the hot side, or realize that, hey, VAT is so annoying, I can't deal with it. The idea is, what you're up against if you start a company, if you start an Osek Moshe, whatever it might be. And if you're up for it, great. But if you're not, you should know what the alternatives are, because when you do your decision-making process, you need to have all the factors in front of you. So that's what we're really trying to present here, the various factors, so you know what's Roes Hanolad. You can see what's ahead, and then you can make an informed decision, whatever that decision you feel is best for you. Realizing you can change sometimes. You can change from Osek Moshe to a Chavra, but it's important to know, immediately after you start one of these entities, what the responsibilities are. Like anything in life, what am I responsible for now that I started it? So, Bituach Leumi, VAT. Once you're paying employees also, you should realize you're going to have to start remitting those things regularly, and everyone should know what's entailed there. Running a business is important, and some people, the most important thing is not having to deal with this. So in which case a PEO might be good. Some people, save every receipt from, 10 years ago, and it's not a problem for them to save receipts, save expenses, and run their company. It doesn't bother them, but, no two people are alike. So it's important to know what type of person you are and what will work best for you, and could be you and your business partner. Keep that in mind. You could have a partner here, and they might have a decision. They might have a say in it also. So it's important that, let's say you're a U.S. person, they're not a U.S. person. It has to be a solution that works for both of you. Many businesses are started by partners, and one could be U.S., one not could be U.S. So it's important that hey, I'm a U.S. person. You're starting a business with me. These are my interests, and this is what's important to me. So you're properly represented in the starting of that business. Do we have any other questions?
Yeah, we just have a couple more questions I see here. One, just I'll answer myself. There's been a couple questions regarding how much a PEO could cost. There are different services that provide different options. Some provide on a percentage basis. Some provide on a flat fee basis. If you'd like specific information, you will have my contact information. You can definitely reach out to me, and I can give you a specific quote for my business. But there are other different POs have different charges based on different criteria. There's a specific question that came in from Facebook. Someone wanted to ask why would a person who owns their own business in the U.S. want to incorporate in Israel, and are U.S.-based companies taxed in Israel? That's a question for you, Fred.
Okay, so in that answering that, it's important to make a distinction within someone's 10-year holiday versus after their 10-year holiday. Conceptually, generally speaking, the Israeli authorities will view a company operating in Israel as an Israeli company, even if it happens to be incorporated in the United States or any other country. So if an Israeli opens up a U.S. company, sits in Israel, and does business, then there's the regular Sabra. They open regular Israeli, then they need to be collecting VAT and paying Israeli corporate tax. And the U.S. would give them actually a credit on the corporate tax, because Israel says, hey, the management and control of this company is in Israel. We have the right to tax that. Now, for an Oleh Hadash, for the first, or a Toshav Chozer Vatik, but here we'll talk about Oleh Hadash, someone that made Aliyah in the first 10 years, that 10-year holiday has a special provision that says that the rules of management and control do not apply, which means that if you have a business operating in the United States, even though the controller of that business is in Israel, so then if it's a business that's in the United States, you might pay United States tax first on that and get a credit in Israel. Israel by default doesn't say, hey, it's an Israeli corporation because of the management and control of it. Now, if the CEO of that company is in Israel and is drawing a salary there, they're going to say, hey, if you're sitting here drawing the salary, we'd like some income. But the corporation itself does not de facto become an Israeli corporation due to management and control within the first 10 years, if the management control is by an Oleh Hadash in the first 10 years. After 10 years, it is, you can do an LLC or an Inc., whatever it is. If the control of that company is in Israel, Israel views it as an Israeli corporation for all intents and purposes. And if you're servicing another company in Israel, you collect VAT from them, or an individual, whatever it might be. So it's important to know that the fact that it's a U.S. corp, Israel will take issue with that after the 10 years and say, hey, this is an Israeli-controlled corporation.
Okay.
Okay, if there are no more questions, unless anybody has any last-minute questions, I want to thank Baruch and Fred, and as well Yaakov Jacob, who's been on the back end ably answering the questions that came in to help Baruch and Fred keep moving along in the presentation. Thank you all for being with us. Thank you again to Baruch, Fred, and Yaakov. Oops, we got one more question. We'll let that slide in. And then we'll sign off for the evening.
Okay. Someone wants to know if you can explain what a Karen Ishtalmut is a little bit more in detail.
Sure. Karen Ishtalmut is a savings plan. It was actually the origins of it were for a sabbatical, for like a Shemitah year, a sabbatical year, that you're able to put away a certain amount for 6 years, and then it becomes liquid on the 7th year, which means that you can, now typically the employer and employer contribute to that plan, but the idea is, let's say on your earnings, you're able to contribute, let's say 10% to that up to a certain threshold. Let's say you're earning 10,000 shekel a month, you're able to put 10% of that into that plan. It's invested, it's managed by one of the insurance companies in Israel. It's managed money, it grows, and then let's say you've put in over the years, you've put in 30,000 shekel per year. That money grows over those 6 years, and then in year 7 it becomes, for Israeli purposes, it becomes tax-free, liquid and tax-free to come out. The U.S. will, I don't want to go into the taxation of how it comes out at the moment, but it will grow it can grow tax-free for Israeli purposes. And the idea is it comes out tax-free for Israeli purposes, at least. So it's a very, very, very nice way for someone in Israel to save money. And remember, that money is growing tax-free for Israeli purposes as well. So it can be a very nice amount of savings for someone. If they once say they want to use it for a car or a down payment on a house, they have that after 6 years. Or if they want to let the money continue to grow tax-free and use it more as a pension, ultimately they can do that. You can even take a loan out against it. So it's a very nice asset to have. But it's really pre-tax money that the government allows you to put in every month into a plan. You contribute and it grows. It's invested. Hopefully, if the market is doing well, it's growing every year. And then it becomes liquid within, by year number 7. So it's not like you're parting with the money like a pension money. You actually do have access to it by year 7. And for some people, that's, you don't think about that money in year 7. It can be a very nice amount of money to use to help, for whatever financial endeavor you might have.
Okay, someone just asked, we only have like 2 minutes left, but if someone asked specifically, you discussed about the Israeli side. I know the U.S. side of taxation for Karen Ishtalmut is a little bit controversial. Maybe you could just give 2 minutes on that.
Yeah, it is. I didn't want to give an opinion on it per se, but I'll say that what I certainly can say is if you view it as money that was taxed going in, then the principal would not be taxable when it comes out. Only the profits would be taxable when they come out. Again, so whatever money you view as tax-free going in, you will only pay money on it coming out. Whatever you tax going in, you will not tax going out. So if you held that, the contributions are, so to speak, taxable money for U.S. purposes, and you had other foreign tax credits to carry it so it didn't hurt you, then the principal coming out would be tax-free, and only the earnings would be taxable coming out. Whereas if you felt the other way and you didn't tax the earnings going in, then the whole thing would be taxable when it came out. I hope that was vague, but enough that people understood the two sides of it.
Okay, and with that, we will sign off for the evening. Thank you, everyone, for being with us.
Pleasure.
Again, this has been recorded, and we will be sending out the PowerPoint presentation, recording of the presentation, contact information, and anything else that was mentioned here sometime tomorrow or Thursday by the latest. Thank you again, and good evening.
Good night, everyone.
Thank you. Have a good night.
Thank you, everyone.